Hello, my lovely viewers and subscribers. Welcome back to Trading with Whales, a workshop designed for top 1% retail who are willing to put the effort and time to truly understand the market. 99% of you will click away and won't watch this video till the end. But to the 1% who stick with my workshop, congratulations, you have my full support. You can ask anything in the comments and I will be more than happy to address all your concerns. I trade live every day on my other channel. You can look for JJ Edwards or the name of the channel, which is FX News ME. I also left the link to the other channel in the description. As usual, before we start with our day, we go to the Lord. So Lord, thank you for giving me the patience to learn and grow. Help me stay humble in wins and calm in losses. Guide me to trade with wisdom, discipline, and kindness. Bless those who seek truth in the markets and remind us that effort brings understanding. Amen. Okay, the reason I entered this trade because the point of control from this pivot high to this pivot low has shifted to $875. My stop is tight and I would like to target at least 1 to 2. I left the stop slightly above the tail or the wick of this bullish candle that we have in here. This is one of the order blocks that the bulls has utilized to go long. The first target should be above this high where the liquidity is resting. Let's go to 5-minute chart to find our levels. I have the level at $28,888. That's this low and slightly this low, and we also have a massive liquidity void or fair value gap in here. So over here the price returned to this area and then ripped higher, formed some sort of equal highs. Today the price has returned to the same area, filled the entire portion of this bullish fair value gap, and I do expect the bounce to at least get to $28,953. That is an expectation. I leave my TP over here. That's 1 to 2 risk to reward. This liquidity is from the Asia low. You can see Tuesday, May 19. I'm going to remove it. We have a chain of bearish candles in here. 1, 2, and another one here. The price ripped higher and closed above this bullish candle. Now this bullish candle, you might wonder, why is it important? This bullish candle is important because if they are trapped buyers, their price should have gone lower and attacked $28,814, which is the previous low that can be seen in the 5-minute chart. This is the low. So the selling pressure came short. When the selling pressure came short, when it approaches a low, that means we do have passive buyers somehow in the market. As for an entry, I have 1, 2 bearish candles in here. I pick the high of this bearish candle around this price to participate in a long order. And furthermore, the point of control, which has shifted lower, that means we do have a ton of buyers came into the market, must hold and extend the uptick in momentum. I have one fair value gap in here. I would like to mark it on the chart. This is an inverted fair value gap, now currently working as a bullish fair value gap. The price respected mean threshold. So far, so good. If the price fails to make a new high and attack these equal highs perhaps in here, on a reversal, if the price closes below this level, we can use mean threshold or the lower portion to target $28,814. Okay, the first partial is about to close. Okay, I closed it manually. One contract is remaining. I see a wick. Now I want to move my stop slightly higher below the close of this candle. This trade is not free, but we could secure around $65 in that trade. According to our daily volume profile, which represents the entire day so far, the value area low is at $919, and this price, the value area low, as you guys know, if it is above the price or price is below the value area low, the market is still bearish. If value area low was also switching lower, that would be better for a buy setup. Over here, if the market is serious to go higher, we have 1, 2, 3, 4, 5, 6, 7 bullish candles. this should be the last bearish candle that tapped into these bullish candles. 50% of it is around here. So this tail is good so far, but I don't want to see a close below this tail. That would diminish or weakens our bullish outlook. Okay, our stop is hit. Now, if I see it close below this bearish candle, I can use the mean threshold to go short, leave the stop at the highs, and close one partial at the current low, and leave the second one to $28,814. It's closed. I left the seller stop there. The risk should be above this bearish candle. First partial is below the current low. Did I press buy button? Oh my God. I pressed the buy button by mistake. I want to go short in here. Okay. Now we are in that short position. My take profit, ultimate take profit. I don't have enough margin. Okay, I don't have enough margin to add another position. It's a reversal. The value area high stands tall. We had a tiny liquid sweep above $28,930. The price did not continue. I mentioned the price must respect half of these chain of bullish candles. It did not, ripped lower. Now we are using the mean threshold of the same fair value gap in here to go short. Once I see a new low, I would like to bring my stop to break even because my account says I am running out of margin. Okay, now we have a new low. Stop goes to break even. It's a risk-free trade now. Okay, the order is filled. I see NASDAQ made double bottom. So if I see a candle closes above this inverted fair value gap, I will be sure that we are in a manipulative choppy market because it should respect and go ahead and take $28,814. If it closes above it, that indicates NASDAQ might want to go and take 28,930. I might be able to find a small chance to target that level and join this manipulation. Now we are having almost a close above that level. So if these 3, 1, 2, 3, 4 are trapped, this one is also trapped because now we see an up close candle. Let's see if I can get an entry above this bearish candle and one in the mean threshold. As for the risk to reward, I would like to target the same high that I did before. Since we have double top, but the liquidity is thin in here because they already tried and wicked into the liquidity above $930. This liquidity is thin or paper thin, and the price can potentially rip higher. But the first order is filled. My profit target, let's leave it at the close of the candle. Speed of tape shows aggressiveness is coming to the market. The candle is got yellow. You will learn about this concept as well. We are having a new high, and as you can see, 140 contracts step in the market. They are trying to push the liquidity above these equal highs. This area is thin. I can move my stop to break even. The reason I left the pending order at the close of these candles because over here the price had issues or had trouble with taking that high. So the market is behaving like this now. It is respecting highs and it is respecting the lows. Therefore, I don't want to risk it. I left it at the close, the settlement price in here, not the wicks. Just a few more ticks. The target is hit now. Time is 7:03. It's time to close these trades for the session. Before we close, let's look at our statement. Day 3, May 19, 8 trades, 87.5% win rate, $334. Thank you for watching. Stay safe, stay observant, and protect your capital. I will see you in the next episode.